Hello and welcome to another episode of the Federal Church Presents Better Than Bloomberg. Continuing our coverage of the 2023 global financial system collapse, the worst ever, where the Fed and pretty much all the other central banks are going all in on making you poor, at least for 99.99%. And on this episode of You're Gonna Be Poor, there's an entertaining, I don't know what you call it, it's kind of like the ticker thing from News Squawk. At Zero Hedge, what's up? But of note here is Villeroy notes risk of entrenched inflation. Oh wow. Well, you should a central banker now fucking admitting to, the disaster that's going on. So ECB's Villeroy said, we now face the risk of entrenched inflation. Price growth has become more widespread and potentially more persistent. Let's see here. And then there is another interesting part here too, where we get to see that essentially the Fed here are dirty little liars. I mean, they're either outright lying or incredibly fucking incompetent. I wouldn't be shocked if it was both, actually, because historically that's what it's been. But Fed's Goolsbee said the right monetary policy approach calls for prudence and patience. Needs to assess the potential impact of financial stress on the real economy. Are you fucking shitting me? The real economy is fucking imploded. I mean, even their jobs numbers are complete and utter fucking bullshit. Because they're multiple shitty jobs that are the fucking jobs numbers there. And then you just had, a 250,000 of people unemployed in the, the tech sector, these higher paying jobs, or high paying jobs, real jobs. And the Fed needs to watch for tighter credit conditions and account for headwinds when setting monetary policy. Yeah, just more fucking bullshit. He said, given uncertainty over financial headwinds, we need to be cautious, and the Fed needs to be careful about raising rates too aggressively. He said markets and financial issues should not drive actions. One has it. Right? Everyone needs to be bailed out. And supervisory, because they always got PPT to fucking print money for me, right? And supervisory and regulatory tools, not rate cuts, are the principal defense against financial stress. He said that current monetary policy and tighter credit conditions can work in tandem to help cool inflation, while the Fed must recognize that the combination of tighter credit and monetary policy can hit sectors and regions differently than if monetary policy was acting on its own. He noted said inflation data continues to come in extremely strong, and the foremost question is how credit conditions evolve, whilst the job market feels like it's cooling a bit. And then here's a funny one too. Fed's Harker, 2023 voter neutral, said we have to be a little careful not to overdo it. It doesn't matter at this point. 50 basis points, 100 fucking basis points does not fucking matter when you print trillions of fucking dollars. Bank stress has calmed down, but it is not over. This is complete utter fucking bullshit. All of the banks are insolvent, damn near all of them, because they do that by convention. And the worst part of it, it's kind of like the Zion's Bank example I gave. These banks, instead of, loading up on treasuries, like Zion's Bank, a third of their capital reserves are treasuries, the other 2/3 are mortgage-backed securities, which we'll show in a second, with the 2007-2008 stuff, that it's not that it was just toxic mortgages, with the underlying being completely, fraudulent or whatever. It's that all the mortgages are worth, all these mortgage bonds are worth less because of the interest rate risk. All of them, not just a few subprime mortgages, but all the fucking mortgages these banks bought and now have as their depository, their, what do you call it, the money changers told people to medicate my food again. So that their capital reserves for their deposits are all worth not just worthless, but worth less, But, in time will be worthless completely because they can't even offload it to the Fed. a lot like in that facility. And it was interesting to see, too, people who wouldn't know about this. No, it's not their job to know. But people who wouldn't know about this will just look at stuff like this and say, oh, look, the people at the Fed. I don't even know what the Fed is. But the people at the Fed said everything's okay. And then they actually believe it. You know, it's just like the experts in the bullshit pseudoscience psychology. Oh, they're experts. They said this, blah, blah. Well, you probably shouldn't believe them. And then we're going to watch a video in a second about these dirty little liars being completely incompetent or completely lying. And probably a little bit of both. And this is hilarious too. He believes this is not the time to change the Fed's 2% inflation target. What 2% inflation, you fuck? They're in double-digit inflation. Even the fudged ones, there was another note from Zero Hedge that it showed just food inflation was 10%. I doubt that's, it. I think it's a lot more than that. It just depends what they have in the basket. But I don't even know why this is even worth saying. And his view has always been to get rates above 5% and keep them there. Well, they definitely did that. If inflation does not move, he thinks more action will be. What, move higher? He finds it disappointing that recent readings show disinflation proceeding slowly. No shit. And the Fed will determine what, if any, additional action is needed by looking at the data, but already sees promising signs of the Fed's actions. And again, this is not a note from Zero Hedge either. I don't know where he gets this news clock stuff. But Fed's Kashkari, this fucking genius too. He apparently didn't know what he wrote in, with some of the policy or whatever Fed stuff that he fucking wrote. Said he is less optimistic than the bond market on the speed of the fall in inflation. He sees inflation at the middle of 3% by year end and closer to 2% this year. I don't know where the fuck you got that idea, but, just like all the other stuff that they spew, it's either complete lie or complete incompetence. He said he is not ready to declare an all clear after SVB failure, but there are hopeful signs. He stated that the 2% inflation target should not be changed. He does not see a buildup of the kind of risk that took down SVB, building up in the banking sector as a whole. U.S. Treasury Secretary Yellen said she has not seen evidence suggesting a contraction in credit. Whatever they remind me of the others. Although that is a possibility, not anticipating a downturn in the economy, although that remains a risk according to Reuters. Again, she's a dirty little liar too. And we're going to watch these dirty little liars in action.
Ben, there's been a lot of talk about a housing bubble, particularly, from the Fed, from all sorts of different places. Can you give us your guess whether or not there is a housing bubble out there?
Well, unquestionably, housing prices are up quite a bit. I think it's important to note that fundamentals are also very strong. We've got a growing economy, jobs, incomes. We've got very low mortgage rates. We've got demographics supporting housing growth. We've got restricted supply in some places. So it's certainly understandable that the prices would go up some. I don't know whether prices are exactly where they should be, but I think it's fair to say that much of what's happened is supported by the strength of the economy.
Tell me, what is the worst case scenario? So we have so many economists coming on our air and saying, oh, this is a bubble and it's going to burst and this is going to be a real issue for the economy. Some say it could even cause a recession at some point. What is the worst case scenario if, in fact, we were to see prices come down substantially across the country?
Well, I guess I don't buy your premise. It's a pretty unlikely possibility. We've never had a decline in house prices on a nationwide basis. So what I think is more likely is that house prices will slow, maybe stabilize, might slow consumption spending a bit. I don't think it's going to drive the economy too far from its full employment path, though.
So would you agree with Alan Greenspan's comments recently that we've got some areas of the country that are seeing froth, not necessarily a national situation, but certainly froth in some areas?
You can see some types of speculation, investors turning over condos quickly. So those sorts of things you see in some local areas. I'm hopeful that, and I'm confident, in fact, that the bank regulators will We'll pay close attention to the kinds of loans that are being made, making sure that underwriting is done right. But I do think that this is mostly a localized problem.
That's the beautiful part of this crisis. For the most part, the underwriting was done right. I mean, there wasn't any funny business there. You know, like their ninja loans or whatever. It's just the fact that interest rates are rising, and all of those bonds are now worth less.
And not something that's going to affect the national economy. This scenario envisions that consumer spending, supported by rising incomes and the recent decline in energy prices, will continue to grow near its trend rate, and that the drag on the economy from the housing sectors will gradually diminish. The motor vehicle sector may already be showing signs of strengthening. After having cut production significantly in recent months, in response to the rise in the inventory of unsold vehicles, automakers appear to have boosted the assembly rate a bit in November, and they have scheduled further increases for December. The effects of the housing correction on real economic activity are likely to persist into next year, as I've already noted. But the rate of decline in home construction should slow as the inventory of unsold new homes is gradually worked down.
There's plenty of liquidity out there. He said he did not sense a lack of liquidity in the market. And he said we're monitoring the markets, but didn't really make any clues. So he went as far as he had to go, but not further.
He also calmed the fears about the subprime market, which were rippling through Wall Street yesterday.
Again, this is a beautiful part of this collapse. It's not just the subprime mortgages that are going under. It's all of them.
And said we're taking
and all the derivatives with it.
Look at it, but right now it doesn't seem to be an issue, but we're watching it, certainly.
That's exactly right. So let's first take a listen to what Ben Bernanke had to say about the economy.
So we expect moderate growth going forward. We believe that if the housing sector begins to stabilize, and if some of the inventory corrections that are still...
They haven't even seen that part yet. The housing sector implodes as the rates rise. That didn't even happen yet, but it will.
Going on in...
It's only in a few, subsectors like commercial real estate or specific geographical regions, but it will be everywhere.
Manufacturing begin to be completed, that there's a reasonable possibility that we'll see some strengthening of the economy sometime during the middle of the year.
He went on to talk about the subprime market. Another fear yesterday was that there'd be contagion, but not in the eyes of Ben Bernanke.
We'll line through their teeth.
Our assessment is that there's not much indication at this point that subprime mortgage issues have spread into the broader mortgage market, which still seems to be healthy, and the lending side of that still seems to be healthy.
It's not
the pace of home sales seems likely to remain sluggish for a time, partly as a result of some tightening in lending standards and the recent increase in mortgage interest rates.
Because of the interest rates rising.
Sales should ultimately be supported by growth in income and employment, as well as by mortgage rates that, despite the recent increase, remain fairly low relative to historical norms. However, even if demand stabilizes as we expect, the pace of construction will probably fall somewhat further as builders work down the stocks of unsold new homes. Thus, declines in residential construction will likely continue to weigh on economic growth over coming quarters, although the magnitude of the drag on growth should diminish over time. The global economy continues to be strong. Supported by solid economic growth abroad, U.S. exports should expand further in coming quarters.
Look at the person behind it, too.
Overall, the U.S. economy appears likely to expand at a moderate pace over the second half of 2007, with growth then strengthening a bit in 2008 to a rate close to the economy's underlying trend.
60 Minutes, Rewind.
Point being, just like you see
Aside
Yellen.
from the president, he's the most powerful man working to save the economy.
It's either they're liars or incompetent. And again, they're supposed to lie because they're supposed to try to shore up confidence. But if you're one of those idiots stupid enough to believe them, well, you're the one stuck with the fucking bag. You're the one holding the bag where everybody else got out already, and then you're there with none of your deposits left. Or if the way Yellen has it, you'll have your deposits. It'll just be worth nothing in the dollar in which it's denominated. Oh, get a load of those too. IMF financial stability report says changes to the BOJ's yield curve control may affect international financial markets through 3 channels of exchange rates, term premiums on sovereign bonds, and global risk premiums. So basically, their money printing screws with everything too. That's pretty funny. Not that we didn't know that already. And that's basically what was said in the introduction to this video. Don't forget to donate, because no matter what bullshit you tell yourselves, but you fucking pay that tithe and make those donations to the church, horrible things will be happening to you and your economy. You will see the worst poverty you couldn't even imagine. And they'll tell you, everything is fine. Everything is fine, while you're actually in poverty too. Make sure to donate. The Reverend can't save you without the Rolls Royces. Oh, and don't forget, no matter how much they lie to you and claim to be an expert, they don't have the divine right of expertise that the Reverend has. You should donate in Bitcoin in the description.